So this morning I've seen the release of a couple of pieces of key property data that I just want to share with you so that you can get an up-to-date view on how the housing and mortgage market is actually performing right now. First of all, we're going to take a look at the Money and Credit Report from the Bank of England covering the period of March 2024. And as you can see, net mortgage approvals for house purchases rose from 60,500 in February to 61,300 in March, the highest number of net approvals since September 2022. So these are mortgages that have been approved, not yet completed, for property purchases. So if we scroll down to look at this piece of information in a little bit more detail, we can see net approvals for house purchases, which is an indicator of future borrowing, continued their upward trend, increasing from 60,500 in February to 61,300 in March. This is the highest number of net approvals since September 2022 when they were at 65,400. This is telling me that despite this higher interest rate environment that we're seeing right now, people are adopting a just let's get on with it attitude and going ahead and purchasing property. At the end of the day, if you're living in rented accommodation, you will know that those rental payments are also on the increase. So what point is there, if you're able to get a mortgage, in actually paying somebody else's mortgage and lining their pockets? Why not get yourself onto the property ladder, investing in your own property and benefiting from any future increases in the value of that property? If we go back up to the key points again, the effective interest rate, which is the actual interest rate paid on newly drawn mortgages, decreased by 17 basis points to 4.73% in March. Now, again, let's just scroll down to look at this piece of information in a little bit more detail. Individuals borrowed on net zero point 0.3 billion of mortgage debt in March compared to 1.6 billion in February. So mortgages that completed in March were of a lower value than those that completed in February. The annual growth for net mortgage lending remains slightly negative at minus 0.1% in March, but gross lending rose from 18.6 billion in February to 20.1 billion in March, which is its highest number since February 2023. So then touching on that interest rate that we just spoke about, it's underneath this graph. The effective interest rate, the actual interest rate paid on newly drawn mortgages decreased by 17 basis points to 4.73%. The rate on the outstanding stock of mortgages increased by 2 basis points to 3.5% in March. So to just try and explain this in a little bit more detail, the newly drawn mortgage rates that's decreased by 17 basis points, that's because of the fluctuations that we're currently seeing in interest rates that are available from mortgage lenders. When we look at this data in the coming months, we will see that this number has probably increased again. And that's because since Christmas and the New Year, we have seen a steady increase in lenders' interest rates. And it's something that we are reporting on an almost daily basis on our Instagram account right now, where we're seeing lenders day after day increasing their interest rates. This is all because there's a lot of uncertainty about when the Bank of England are going to make that first rate cut. They're still worried about inflation and they don't want to make that first cut too early, just in case they have to put rates back up again. That's not a situation that they want to find themselves in. Because of this delay and because of the message of higher for longer, that's had an impact on swap rates. And now the lenders can't get money as cheaply as they could previously. And so they're having to increase the rates that they offer to people. Now, this data is also backed up by a report that was released yesterday by Zoopla. So let's just take a look at that. Sales on the up as house prices hold steady. Buyer confidence is improving and 12% more homes are going under offer compared to this time last year. Mortgage approvals for house purchases are also up 32%. So the key takeaways from this Zoopla report: sales agreed volumes up 12% year on year as house prices stay static. Homes in the south are currently seeing negative price inflation, and 64% of homes are in markets with price falls, but this is down from 82% last October. So this is showing that we are still seeing people reducing their asking prices and sellers accepting lower offers from buyers as everybody is now starting to adapt to this new environment, because higher interest rates means less affordability. So the market is now trying to find a natural balance. The report does go on to say the housing market is now more balanced than it was before the pandemic, which is good news for sellers as it means more people have a chance of moving home in 2024. The number of homes available for sale is continuing to grow, but house price inflation remains broadly static. So normally you would expect that when supply increases, that prices fall, but that's not necessarily actually what we're seeing. We are just starting to see the properties that come to market priced more realistically. And the good thing about all of this is that those static house prices are good for buyers who are already struggling to cope with a 60% increase in mortgage payments in 2024. So like I said, because we're in a higher interest rate environment, because mortgage payments are going to be higher, the calculations that lenders carry out means that people can't now borrow as much as they previously could when interest rates were lower. So, of course, that has an impact on what they can actually borrow and therefore an onward impact on the property values that they can now look to purchase. Further on in the report, meanwhile, more homes for sale and renewed buyer confidence means more sales are being agreed. In fact, sales agreed are up 12% compared to this time last year. Now, obviously, property sales do fall through at some point in time. I don't know the specific numbers. Maybe some of you that are viewing can actually comment on that if you do know them. But we are seeing more sales agreed, and the market is actually starting to show signs of improving. March and April for us have actually been a lot busier than they were previously. We are starting to get a lot more inquiries from buyers and people wanting to move home. The report also says, and for the first 4 months of 2024, the number of homes going under offer has also been higher than the same period in the first 4 months of 2023. And if everything goes according to plan, according to Zoopla, their data shows that the housing market remains on track for 1.1 million sales completions in 2024, which will be up 10% on 2023. So all of this is positive news for the housing market. It just does go to show how resilient the UK property market is. As you'll always hear me say, we live on a small island, we've got an ever-increasing population, and there is always a desire for people to own their own homes. Because over long periods of time, property prices tend to increase, meaning that it's a great investment. But how are you finding it? Are you looking to buy a property right now? Has your affordability been hit by the higher interest rates? Have you decided to put things on hold? Or have you just decided, like it seems a lot of people have, that you know what, let's just get on with it. We're not going to pay higher rents anymore. Let's just buy our own property.